Hello again, you're joining us in the newsroom at Business Television India. Now let's talk about Dassault and its CEO, Eric Trappier, who's cleared the air on the Rafale jet deal. He's saying the deal with Reliance Group for offsets has been a deal between two private companies and due processes have been followed throughout. In fact, he's also clarified on the kind of investments that are going to be made in this joint venture and the rationale in choosing Reliance Group as the partner. Here's an excerpt of the conversation we had.
The government of India has its own procedures, and I'm convinced that they followed the procedures. And you have the French government, they have their own procedures, different from India, and I'm sure also that they followed their procedures. Former President Hollande made and performed a correction of what he said. He said clearly the two partners found themselves together. So it's not at all a decision of the French government or the government of India that Dassault selected Reliance. When we created the JV last year, and the decision of creating a JV was part of our agreement again in 2012, but we waited for the contract to be signed. We are supposed to put in this company together Reliance and Dassault about 800 crore, so 50-50, because you know the shares in the JV is 49% for Dassault and 51% for Reliance. For the time being today, to start the work with the hangars, with the workers, to pay the employees, we have already put about 40 crores, but it will be increased up to 800, which means 0.5% for Dassault, 400 crore.
All right, so there'll be more of Dassault later on, but for the moment we're cutting across to the media conference of Tata Steel. They've come out with their second quarter numbers. Let's listen into the management.
Especially in the last few weeks. As far as India is concerned, even though it was a seasonally weaker period, domestic demand has been good and the domestic steel prices have remained buoyant, and we remain positive on domestic demand. The EU steel demand recovery continues. However, imports growing at a higher pace is an area of concern for us in the EU. Moving on to a performance during the quarter, Tata Steel delivered strong performance with higher deliveries in India and improved realizations across geographies. Volumes from India, including Bhushan Steel, now comprise 58% of our total volumes. Tata Steel standalone deliveries grew higher than the broader market, which was 7% quarter-on-quarter and 2.1% quarter-on-quarter, and again demonstrating 7.7% year-on-year and 2.1% quarter-on-quarter, again demonstrating the strength of our marketing franchise. And this time in the pack we have shared highlights of our industrial products and projects business, which constitutes about 40% of our domestic sales volume. Tata Steel Europe was affected by operational issues on account of our ongoing upgradation program as well as some annual maintenance during the quarter, which impacted deliveries. We also had some operational issues otherwise which made things a bit worse. The upgradation will of course strengthen our product mix over a period of time. Bhushan Steel's deliveries also increased 34% quarter-on-quarter as an improved marketing strategy helped us in reducing the inventories. And the Southeast Asian operations delivered higher volumes and stable profitability despite weaker markets. Some comments on the developments during the quarter. The integration of Bhushan Steel is progressing well. We are focusing on improving the maintenance and safety practices at the plants, which will also improve plant reliability and help us ramp up the volumes. And we are targeting about 4 million tons, slightly more than 4 million tons in this year. The phase 2 expansion of Kalinganagar is on track. Work has started on the cold rolling mill complex, which will help in enriching our product mix and optimizing cash flows. Enabling work on the rest of the project is also at a very advanced stage. We have also signed a definitive agreement with Usha Martin to acquire their steel business. And this acquisition is part of our overall strategy to increase our India footprint and build capability in long products while improving our product portfolio. Tata Sponge will carry out this acquisition and we expect this transaction to be completed in the next 6 to 9 months. We continue working on the planned European JV with ThyssenKrupp, and the phase 2 review by the European Commission has started, and this typically takes 90 working days. With this, I will hand over to Kaushik to walk you through our financial performance.
Thanks, Naren, and good evening, ladies and gentlemen. I would like to now talk about some of the highlights of our financial performance. As you would see from the release, our financial performance has been very strong this quarter, especially in our operations in India. which has had a best ever performance in terms of EBITDA margin as well as the absolute EBITDA. This is also the first quarter where we have included the Bhushan Steel financials for the full quarter in our results. The group revenues witnessed a growth of about 34% year-on-year and about 15% quarter-on-quarter. This was primarily driven by additional revenue from Bhushan Steel, improved deliveries in India, and better realizations across all our geographies. We improved our consolidated EBITDA margin by around 340 basis points on a Q-on-Q basis to about 20.7%. Our quarterly consolidated EBITDA jumped by about 93% year-on-year and 38% on a quarter-on-quarter to 9,000 crores. The revenues from Tata Steel India increased by 26% year-on-year on the back of improved realization and better deliveries. The EBITDA jumped by 79% year-on-year to 6,113 crores, which is a margin of 34.1%. The EBITDA per ton has been at a very robust level of about 19,244 rupees, which is the highest quarterly EBITDA in the last 6 years. Tata Steel Europe, as Naren mentioned, has had a challenging operating quarter on account of unplanned outages and shutdowns in both Port Talbot and IJmuiden. IJmuiden has since come back to its normal operations, and in Port Talbot we are having the Blast Furnace 5 major repairs for life extension. In Tata Steel Europe, the revenue declined by about 3% year-on-year due to the lower deliveries on account of the reasons I just mentioned. This was partially offset by the improvement in realization per ton. The EBITDA was about 120 million pounds, and the EBITDA per ton stood at about 4,886 rupees, or about 53 pounds per ton. Southeast Asian business deliveries were good despite the sluggish demand. The EBITDA was steady at about 112 crores. Bhushan Steel registered a revenue growth of about 27% quarter-on-quarter on the back of increased deliveries compared to the previous quarter and better realizations. EBITDA increased to about 1,173 crores, and the EBITDA per ton has crossed the 10,000 rupees, so it's about 10,291 rupees per ton, which is a very competitive level of EBITDA margin of about 20%. We expect to realize further system-wide synergies from the Bhushan Steel integration going forward, and full actions are underway at this point of time. Consolidated profit after tax for the quarter increased to about 3,116 crores on which translates to about a quarterly EPS of about 31 rupees per share. Gross debt during the quarter increased by about 2,000 crores, which is primarily on account of the movement of the rupee, so it's a translation impact of about 3,528 crores. The net debt was flat at about 104,000 crores. The liquidity position continues to be very strong at about 26,470 crores, comprising of 14,478 crores in cash and cash equivalent, and about 11,990 crores on account of the undrawn bank lines. The capital expenditure for the quarter was about 2,177, which includes some of the initial capital expenditure in Kalinganagar Phase 2, and some expenditures happened in Europe in the Star 1 program, and the initial expenditures on the blast furnace relining. I will also want to mention, to add to the point that Naren mentioned, that as far as the Usha Martin Steel business is concerned, it has received the shareholder approval yesterday, and we have also confirmed that we will support Tata Sponge's rights issue which has been pursued to raise equity to fund the acquisition. With this, I'll end here and open the floor for question and answers. Thank you.
Thank you. Talking about the Usha Martin acquisition, there were some complaints coming in from the promoters. Mr. Prashant Jawar had also written to SEBI and NSE, is what we are picking up, on disclosure of certain details. So what is the dialogue happening on that front? And also talking about the ThyssenKrupp deal, apparently the European Commission has gotten into a deeper investigation, considering they're expecting higher prices and a competitive advantage to the JV. So if you could give an idea on what's happening on both the fronts.
Yeah. So as far as Usha Martin is concerned, there are issues between the promoters which is for them to resolve. As far as Tata Steel is concerned, both have come out publicly to say that they support the transaction. So as far as we are concerned, we have the support of both the promoters. What issues they have between themselves, they'll have to resolve, and we don't want to comment on that. As far as the Thyssen transaction is concerned, I think we were expecting that it would go to phase 2. I don't think it's anything very unusual. And the commission basically has 90 working days. That's the time frame they set themselves. So that has started. They've asked us a few questions, and we are dealing with it. We are engaging with the commission and will support them in the investigation that they're doing. Kaushik, you want to add anything?
No, that's fine. I just want to add, just as a data point in the Usha Martin transaction, this is the voting results itself speaks that as far as this sale was concerned, it was an overwhelmingly supported voting. So I rested there. On the merger control clearances, the EC had made 3 observations on electrical steel, on packaging steel and automotive. So we are in constructive engagement with EC along with ThyssenKrupp, and we will work together to address all their concerns in the manner which they would want us to. So we are just now in the process, and there's no additional information that one can be shared at this point.
Hi, Vijay here from ET Now. As you mentioned in your opening remark, how do you see the overall demand considering the kind of macro situations emerging with the trade war that we are witnessing, particularly domestically as well as globally, particularly what is happening between US, China, and also in terms of the plans for Southeast Asia, would it be looked into aggressively, or would you focus more on domestic business as the strategy has been via the IBC route? Thanks.
Yeah. So as far as global steel industry is concerned, it's been a pretty good year. The demand has grown quite well. The Chinese demand itself has been 7% plus for the last 8 months. The production in China has grown at around 6%. So that's reflected in the fact that China is exporting less, maybe about 5 to 6 million tons a month, which is a fairly manageable level of exports. So, and if you see the demand growth in most major steel consuming markets, whether it is the US, whether it's Europe, whether it's Russia, it's all been positive growth. Of course, India and Southeast Asia continue to be strong as well from a demand growth point of view. So overall, I think the macroeconomic conditions have been supporting good demand growth. So the trade actions in some sense is caused some diversion of trade flows, has also caused the steel prices to be quite high in the US. So if you look at the US markets, what has happened as a consequence of the trade actions is that the steel prices went up by about 20-25% in a very short period of time. So overall, we see that the good macroeconomic conditions and good demand growth has helped reduce the impact of the trade actions. Okay. Having said that, there are specific concerns that we have in Europe about more material getting diverted from Turkey to the EU as compared to, earlier it used to go to the US. So the EU has also, the European Commission has also taken some steps. So there is a window in which you can send steel into Europe as long as it is similar to what you were sending earlier. And beyond that, there is a 25% duty on whatever comes in. So there is a protection available in EU. And at this point in time, because the domestic markets in both India and China have been strong, the exports from India and China into the EU has reduced, and the Turkish exports has actually stepped into that gap. So overall, we see that the trade flows have not had as much of an impact as, the trade actions have not had as much of an impact as we had feared when they were first announced. And so that's something which is positive. As far as India is concerned, the demand has been reasonably strong. I think over the last 1 month, there's been some concerns because of the NBFC issues. But otherwise, for a seasonally weak quarter, the demand growth has been decent. I know that over the last few weeks we've seen slowdown in auto demand growth, etc. But overall, I think fundamentals seem quite strong, and the government spending on infrastructure is there, and automotive, particularly commercial vehicles, has been quite strong. So overall, we are positive about it. The weaker rupee has, of course, helped us with some comfort against imports. So that's the overall picture.
Hi.
Sorry, you had asked about Southeast Asia. So Southeast Asia, we are always looking at various possibilities, as we have said. So as of now, we have nothing to announce yet, but there are certain options that we are considering.
Hi, this is Promit from Reuters. First question is that when you said that the European Union has raised some questions on electric steel and auto and packaging, does it mean that you'll have to eventually sell them off? And if yes, then have you already started the process?
So they have raised points, which is why it has gone into phase 2, and which is pretty natural of this size of transaction. Also, if normally if in phase 1 there is no remedies which are offered, it goes to phase 2. So that means that we will have more detailed opportunities to have a detailed engagement with the EC, and we will understand what their issues are. As far as electrical steel is concerned, we are already rounds that we are looking for potential divestment. So if that gets consummated, then obviously there is no overlap between us and ThyssenKrupp. As far as the others are concerned, we will, as I said, we will continue to have that engagement and understand what their concerns are, because I think we have the most important issue is the industrial logic, and the industrial rationale remains very strong for a consolidation in Europe, and that's what we believe in, and that's been our fundamental point of view. And it is good for the entire ecosystem of the steel industry, not only steel players but also the community, the sustainability of the entire business. So I think it is the right industrial logic, and we peg our basis on that. So we are in construction collaboration with our colleagues who are ThyssenKrupp as well as the EC, and we'll understand what their concerns are.
And
it's a call you don't want to miss.